This segment sponsored by Foster Financial. Welcome to Money Monday with Foster Financial. Joining me is Caleb Doan, their Vice President, to talk all things money and investing. Hello, Caleb.
Hi.
How are you?
Doing well. How are you doing?
Good. Okay. Big week.
Yeah.
The elections are tomorrow.
Yeah.
It's crazy how quick they came, right?
Yeah, I know. It's like I feel like I've been getting ads for the last 2 years for this, and then all of a sudden it's just here. So
That's I'm looking forward to not receiving random text messages
Yeah.
and phone calls and all these emails and all these ad campaigns. It's like a lot. So I think as a nation we could. Whew.
yeah, exactly.
Yes. Okay. So there's so much to consider, especially with our finances during this time. And I know particularly the 401k. So how does the election impact a person's 401k?
Yeah, that's probably the biggest question that we've gotten this year is, hey, things seem to be a little bit more volatile than what they have in previous years. What do I need to change in my 401k given the upcoming election? And I would say, as a general rule, people probably tend to maybe overestimate the impact that the election has. It certainly has an impact, but a lot of times when all these big elections kind of come up, people are saying, do I need to get out of the market? Do I need to change these big things? Oftentimes that tends to be a bit of an overreaction. There are other factors that have certainly a larger role in determining how you should be invested in your 401k.
Right. And I know we talked a little bit about some of the other type of portfolios when it comes to election season, but I guess I would have never thought the 401k, because that is something that's associated with your job, and that's something that builds up, and people typically don't move it as often as other stock options, right?
Right, yeah. A lot of times there are only certain periods within your career where you're even allowed to move your 401k.
Yeah.
So if you leave your job, then you're able to roll the 401k over to an IRA. Or if you're at your current job and you're over 59 and a half, a lot of times you have the ability to roll it to an advisor inside an IRA as well. And it's a tax-free rollover. It doesn't cost you anything in taxes to be able to do that. But then when it gets rolled over, you have a lot more investment options. Within the 401k, you've got your 20 options. Once you roll it to an IRA, you have really the entire world of options.
Right. And so when people have a 401k, if they're currently employed at that job, you're saying they cannot touch it?
Unless they're 59 and a half.
Okay.
Yeah. Or if they've rolled money into it from a previous 401k, sometimes you can roll that back out even though you're still working there. So there's a lot of options to kind of move things around. One of the biggest changes that we're kind of encouraging people to make in their 401k is taking a look at the level of risk that they're taking on. Because just 2 years ago, if they were invested at about 50-50, 50% stocks, 50% bonds in their 401k, the stock side has grown way faster than the bond side over the past 2 years. So if they haven't rebalanced, they might be at 75-25 now. They might be a lot more kind of growth oriented than what they think. And if there were to be volatility over the next 2 or 3 months, they would probably be a lot more exposed to that. So that's one of the things we're kind of encouraging people to take a look at.
Right.
And within the 401k itself, there's not a ton of great options to be able to reduce your risk. You can go from stock to bond, but then of course you're kind of limiting some of that upside potential. So that's why if you roll to an IRA, you have a lot more options. There are buffered funds, there are custom portfolios, you can get into certain sector funds. There's a lot of different things that we can do that the 401k might not be able to.
Interesting. Okay, so in this moment, what are just a couple of key things people should consider as far as with it being election, 401k? I know that you said that people normally think that they have to make a big change. What do you recommend they do right now?
Yeah, the biggest thing is take a look at the 401k and see how growth oriented or how conservative the account is. If you've noticed that your account has gone up, 30, 40% over the past couple of years, you're probably very growth oriented. And if you're getting within 10, 15 years of retirement, that's a lot of times the time where we start shaving off a little bit of risk. It's basically harvesting some of that gain and saying, hey, I'm pulling this gain off the table, I'm putting it into a little bit more conservative positioning, because if we were to see big swings, then I want to be able to avoid some of that. And then the other thing is, if you're over 59 and a half, or if you have 401ks from previous jobs, think about rolling it to an IRA with an advisor that you trust, because there are a lot more ability, you have a lot more ability to kind of reduce the risk in the account through avenues other than just going into bonds. Like I said, there are those buffered funds, there are different ETFs, different index funds. You can invest in certain sectors that maybe outperform when there are recessionary times. And so we have a lot more ability to kind of navigate the market there.
Yeah, and you know what is best if they need to make distributions to themselves each month, right?
Right, yeah, exactly. Sometimes that can be kind of difficult in a 401k to pull money out of it. So,
Yeah. Okay. Awesome. Well, thanks, Kayla.
Yeah, thank you.
Appreciate it. And if you all would like more information about Foster Financial, we'll have their phone number listed below for a complimentary consultation. And I'll see you after the break.
This segment sponsored by Foster Financial.